Hi, this is Sandra from Smardesk. Here is a deeper dive into the SEC's Spring 2025 Unified Agenda, the first under Chairman Paul Atkins. This agenda represents the most significant shift in the Commission's regulatory philosophy in years, moving decisively away from expansive rulemaking toward what Atkins calls smart, effective, and appropriately tailored regulation. In a statement accompanying the agenda's release, Chairman Atkins has declared a new day at the SEC, emphasizing a renewed focus on innovation, capital formation, market efficiency, and investor protection. But this agenda is defined as much by what it removes as what it adds. The Commission has formally withdrawn numerous rulemaking initiatives from the previous administration that Atkins says don't align with smart regulation goals. This represents a direct and ideologically driven reversal of the previous agenda, which proposed a series of prescriptive and operationally burdensome rules aimed specifically at the private funds industry. 5 major items in this agenda directly impact private fund operations. First, capital formation. The agenda proposes updating exempt offering pathways to simplify fundraising and broaden investor access to private businesses. This could significantly expand the universe of potential investors, easing the challenging fundraising environment many managers currently face. Second, digital assets. Moving away from regulation by enforcement, the SEC plans formal rulemakings on crypto asset offerings, including potential exemptions and safe harbors. This would provide much-needed regulatory clarity for fund managers in this asset class. Third, reducing public company compliance burdens. Several proposals aim to reduce compliance burdens for public companies, including modernizing the shareholder proposal requirements under Rule 14a8 and simplifying the filer status categorization for reporting companies. These changes could streamline the path to exit for portfolio companies and reduce their ongoing compliance costs post-IPO. Fourth, investment advisor rules. 2 joint rulemakings move to final stage, one on financial data transparency and another on customer identification programs for registered and exempt reporting advisors. The SEC's Division of Investment Management is also considering custody rule amendments to address crypto assets. Fifth, enhanced safe harbors for reselling restricted securities. A repurpose amendments to Rule 144 will broaden the availability of the safe harbor for the resale of restricted or control securities. When it becomes effective, the amendment will facilitate secondary market transactions. Most proposed rules target April 2026 for notice of proposed rulemaking, meaning final rules won't arrive until late 2026 or 2027, with possibly even later effective dates. The agenda essentially puts the private funds industry in a holding pattern with regulatory uncertainty that could shift again with future political changes. That's all for today's briefing. Stay tuned for developments as these proposals move through the rulemaking process. For more information about Smardesk, don't forget to visit us on our website.